Hello, everyone. So today we will talk about banking. First, we will talk about the history of banking. Banking started from a simple needs like the safety for money. In medieval Europe, goldsmiths kept gold for people in their vaults. In return, people paid them for safekeeping. Later, goldsmiths noticed that not all depositors withdrew their gold at the same time. Because of this, they began lending the part of the deposits and charge an interest. This practice became the foundation of modern banking. During the 1600s, banking was not regulated. A lot of people can open a bank without a license. But there are some banks failed because of poor practices. This caused public losses. To fix this problem, the governments created the central banks to supervise banks and control the money supply. One early example is the Bank of England, that is established in 1694. Another key development is the fractional reserve system. Banks keep only a small portion of deposits as reserves and lend the rest. Over time, banking changed from simple safekeeping to a regulated system that supports economic growth. Number 2. The BSP functions. The Bangko Sentral ng Pilipinas (BSP) manages the country's money and banking system as the central bank of the Philippines. First is liquidity management. The BSP controls the amount of the money in the economy to keep or maintain its prices. Next is currency issue. It is the only authority that prints and issues the Philippine money. Next is lender of last resort. It lends money to banks when they needed a cash fast. Next is financial supervision. The BSP checks and regulates the banks and similar financial firms to keep them safe. Next is foreign currency reserves. The BSP keep enough foreign money to protect the peso's value. Next is exchange rate policy. The BSP sets rules on how the peso's value is decided in the foreign exchange market. Lastly is the government banker. The BSP holds the government's money and gives it financial advice. Number 3. Bank classification. Banks in the Philippines are grouped by the types of services they provide. First is universal banks. These banks offer full services like loans, savings, investments, and foreign exchange. Next is commercial banks. They accept deposits, make loans, and serve businesses and individuals. Next is thrift banks. These banks focus on savings and lending to a small customers and communities. Next is rural banks. These banks serves the farmers and residents in rural areas with loans and deposits. Next is cooperative banks. Banks owned by cooperative that help the members to save and borrow the money. Next is Islamic banks. It is financial institutions that follow Islamic banking rules without charging interest. Lastly is the digital banks. These banks operate fully in online with no physical branches. Number 4. The different types of bank accounts. First is savings account. It is a basic account to serve money and earn a small of interest. Second is checking account. It is an account for everyday payments and business needs that is usually earns a little or no interest. Next is time deposit account. It is an account where money earns higher interest if kept for a set time. Next is foreign currency account. It is an account that holds a money in foreign money like dollars or yen. Lastly is the joint account. It is shared account where 2 or more people can deposit and withdraw a money. Number 5. Services offered by bank. First is accepting deposits. Banks take the money from people to keep it safe and pay for a little interest. Next is loan services. Banks lend some money to the borrowers to help them buy or start things. Next is ATM services. ATMs let the customers withdraw and check their money anytime. Next is bank guarantee. Banks promise their payment on behalf of the customers when it is needed. Next is check payment. Banks pay money for checks written by the owners of the account. Next is collection and payment. Banks collect and pay the bills and also financial papers for the customers. Next is consultancy. Banks advise the customers about money, taxes, and investments. Next is credit cards. Banks offer cards that let the people or individuals to buy now and pay later. Debit cards. Debit cards let the customer pay or take the money directly from their bank accounts. Next is discounting bills. Banks buy financial papers before their due date for a cash. Next is foreign currency exchange. Banks exchange money from one currency to another. Next is home banking. Customers do banking from home using phone or computer. Next is mobile banking. Customers use a mobile app to manage their bank accounts. Next is online banking. Customers banking Customers bank using the internet anytime. Next is overdraft. Banks may let the customers withdraw more money than they have. Next is priority banking. Special banking services for busy or high-value customers. Next is the private banking. It is personalized money services for wealthy clients. Lastly is the remittance of funds. Banks sends the money from one place to another. Number 6. The bank's organizational structure. A bank structure shows who makes the decisions and who serves the customers. A strong structure can help the bank work smoothly and make good financial decisions or choices. First is the executives. These leaders run big parts of the bank like a branch of networks, loans, or customers' wealth services. They guide strategies and work with the board of directors to ensure the bank succeeds. Next is the directors. Directors help executives to manage and plan to work for different bank functions like savings, loans, and business services. They make sure that their department meets their objectives or goals. Next is department of the manager. These staff decide on how to carry out the plans from the directors. They manage daily operations like new accounts, teller services, and loan processing. Lastly is the bank staff. These employees work directly with the customers and do many tasks, such as helping at the counter, answering the questions, and processing the transactions. They are the people where the customer see them every day. And that's all. Thank you.